Hi everybody, good evening. Welcome to another live session on Traders Cafe at Dalalstreet.ai. The topic for today is start investing in the stock market with the right mindset. And today we have our speaker Anhat Singh Arora, who comes with an experience with Bain and Company as a senior analyst and Get Advantage as a senior investment associate. Now, currently, he's working with Leasify as a senior associate for alternative investments. Over to you, Anhal.
Hi guys, very nice to be here and thank you for this forum and this opportunity to talk to people about the stock markets, especially in a country where we have so much potential left for people to join the markets and be a part of this journey to make a lot of money via investments in equity markets. Since, if before I start off this session, I think everyone knows right now that every other market globally, almost 90% of them are not doing too well. And then we have the Indian market over here that's almost touching all-time highs and is at that level. So just to give a bit of a prequel to the session before I start, to just give an ode to how well we're doing as an equity market compared to global economies. So let me start off by presenting my screen. I think it should be visible now. And just a little deck that I've made for everyone to look at. The main point of this deck being that I want people to look as investing in the stock market as not only something you do to earn a return. It's much more than that. And that's where you have to build a mindset that, even if there are days you make a loss or you don't make what you wanted on an investment, you take back home so many other things that sometimes even not making a return can be justified because you learn so much. So I just want to start with why the stock market. I mean, mostly the answer to this, which people have, is something on the returns end, right? Like that is why people want to be associated with the markets because of the returns. But I also want to show the other things that you can make while you're at the stock market because all of us do know that you do this to make a return. So I'm going to go ahead and yeah. So the first thing that I want to speak about is the fact that you need to have some skin in the game to learn things at times. So, from my personal instances, a little bit about my own journey. I didn't start investing in the equity markets till 2019 personally. So I had joined college in 2017 and I got a gist of how mutual funds work, etc., etc. And out of my teeny tiny college budget that I would get every month, I started cutting corners, taking extra train rides, not taking cabs, walking to places, and saving that extra 2-3 thousand rupees every month. And I started an SIP into mutual funds in 2017, the first year I came into college. After that, 2 years passed, and in 2019, I decided, I think I've been making someone invest my money for me for a good amount of time now. And it's time for me to take a leap now and pick this up myself because I had studied in college, I had seen how these things work, but I've realized with the stock market, nothing beats a live experience. Nothing beats you actually going on a trading floor and giving it a shot and actually buying stocks. Because as much as you read and study, until you get on the field, you're not going to know how it works. So in 2019, I took that lunge. I withdrew all the mutual fund SIPs I had, that 20,000, 30,000 rupees, and I went straight into the equity market. And I realized that I wish I had started earlier. I wish there was a platform for me which I could have like practiced trading on or practice investing on, which is where I also want to show you what Dalal Street has come up with and why it makes it so easy for you to give a shot to investing without losing money. And then, maybe you'll be quicker to the process of starting to invest directly. So I'm just going to share my screen onto the website. I hope it's visible. So this is the look and feel of the platform. One thing that struck me instantly as I saw the platform was how intuitive it is to use for someone who's just starting off in the market, who just wants to get a sniff of how things work here. So very basic and very intuitive to use. I've just gone on Exchange. There are 4 tabs here. One is your home dashboard, which I just showed you guys. The second is the exchanges, which is where you buy your stocks, you sell your stocks. This is updated live. So right now the market is shut. Otherwise, this updates every 1 minute in real time with the prices coming in from NSE. So we can search for any company name, like let's search for India's biggest, let's search for Reliance, for instance. Some issues with the delay in the search. I'll just go back to the exchange and pick up a stock from the ones listed there. Yes, let's just pick something out from here because it was taking time to load since there's a wide variety of stocks on the platform. So let's take Abbott India, for instance, a pharmaceutical company, and let's see how easy it is to use and understand what is happening here. You have a 1 month candle chart to see how the stock is performed, which you can toggle on to 14 days, and as well as a year. You have the current price, how much it's changed in the day, open, close, lows, and highs. Very basic panel on the right hand side where you can basically choose long term or intraday. Very basically done. And then also your type of order, custom and market. Basically, plug in a quantity here, say one, and you want to go long term. The price right now is the one that was the price that the market closed on Friday. So it's at 2672, for instance. You go down below, you'll also get something on the news front. If something has happened related to Abbott India, you'll also get that gist of things here. And then it's a simple buy button, and your order is created successfully. So we saw dashboard, we saw exchanges. Now we go ahead to transactions where we can see the transaction we just executed. Like you see over here, the timestamp is here, the order price is here, and then you also have your portfolio where you can track your profit and loss within these stocks. So very easy way to, one second, I'll just stop sharing my screen. Yes, I was saying a very easy way to buy and sell stocks and try a live hand at the market without actually risking money. Like I said, I had a gap of 2 years between mutual funds and starting to invest in the market, which would have gotten shortened if I had a platform to use like this, which would have given me an easy inclination to understand how things work in the market. I could have, tried my hand for 2, 3 months, seen how I would have done, and I could have come into the markets earlier. So I would really suggest taking aid of a platform that's so intuitive to use. I'm going to get back to the presentation now to take you further on the things besides making returns in the market. So, personally speaking, while I was in college, there was a big push to read the paper every day, watch the budget, be aware of what is happening in your economy. And it wasn't until third year when I started investing, I realized that once you even invested a little bit of an amount, we're just psychologically wired like that. Once you put in a bit of an investment, you're just going to want to know what is happening with your money. Why did that pharma stock fall 6%? You're going to go and search. You're going to be like, what's happening in the pharma space? Did some FDA thing happen? Did someone not get a license? What is happening? So you're naturally going to get curious. So don't only think of starting off when you're investing to only make returns, but the industries you invest in or the stocks you buy, you're naturally going to have a lot of information about them. You're going to be kept in the loop of them because you have some skin in the game, right? The economy needs to impact you for you to learn. The first time I truly watched the budget was when I had invested, was when I was holding 12 shares. I did want to hear what are the policies coming up in each of these XYZ industries, may it be EV or may it be agriculture, etc. And of course, also the tax implications on the gains you make. So, as you have the economy impacting you, and one of the quickest ways to do that is being invested in the stock market because you're literally contributing to the top companies that are running this country, top, medium, small, all of them come together and make the stock market. So you're directly impacted by the economy, and that's automatically going to add to your knowledge and how much you've learned. So it's not only the returns, but also how much is going to add to your knowledge once you start investing in the stock markets. So, second thing I want to talk about is to not be disheartened by the finance community. A lot of times, investing is put out as something extremely technical, while I would say trading is something technical. Investing is something people can pick up really quickly, even if they give it a week's time, 2, 3 hours a day. They can really understand the game of investing. It is not as complicated as what people put it as. It's more of a game of patience and psychology than financial literacy and financial terms. That's the main game with investing. The main thing I want to say about the stock market is what makes it so good is that it's an open door industry. You don't need XYZ degree or XYZ qualification to be a part of the market, to be a part of the investor circuit, right? You're going to be a part of the same stock market flow as the biggest fish and the smallest fish. So it's extremely accessible. It's going to be with you for life. It's something you can use to multiply your wealth through life without needing any finance background per se. So it's very good to understand this fact that the market is going to be there for you forever once you get a gist of it. So that accessibility to the markets is an extremely great factor. This, of course, is something a visual I always like to show, which is the power of compounding. So I showed you two things which were not really return linked. This is that return link point because of which everyone wants to be a part of the markets. And we've all heard stories of how Warren Buffett or how Infosys shares compounded to give people something from 10,000s becoming into 6, 7, 8 figure amounts, right? But one thing really interesting in this visual here you see is that there's an individual who saved $1,000 for a year for 10 years from the age of 25 to 34. Okay. And the other individual did it for 30 years, but he started just 10 years later. Now, the first individual just invested for 10 years. And if you see his return at the end, it's more than the one below than the person who started and did it for 30 years and just started 10 years later. So he started 10 years later, but invested for 20 more years. But he has still made a lesser amount than the person who started earlier. This visual is not tough to, it's tough for the human mind to grasp compounding, which is why even Albert Einstein called it the eighth wonder of the world because it's not intuitive for us to understand how compounding works. But just to get a taste of it, this is what it's about. And the stock market is one vehicle where your wealth compounds if you're an investor. My main goal here is to push investing right now and not trading because trading is something more technical and more time consuming than investing. So, this is one of my favorite quotes in the stock market that was given by Sri Chandrakant Sampath, and how simple he calls investing and how technical people make it sound. If you can just read this quote, I will only buy those companies that are in a business that even fools can understand, have very little debt, have free cash flows, or do not have much capital expenditure, which is nothing but a deferred cost. You don't need to have a finance degree to understand this, right? Not having loans on you, having some cash, and not having a lot of long term fixed expenses on your books that are coming up, right? So, a very basic approach to investing. And he's actually one of the most successful investors our country has seen. So, yeah, going on ahead, this is also a mentality that is very important that you don't look at the share price while investing if it's actually a fundamentally good company. There are times you'll be like, oh, it's at its all-time high, I'm not going to invest, but then it's going to make 10 more highs over that. And that high you saw before will seem like a 1 year low after time has passed. So if you find a fundamentally strong company, you have to be investing in that and not the share price. When you're trading, I would say invest in the share price. So this is where a lot of people get confused. If you're a trader, or if you haven't started investing and you've heard this mentality of getting this price at this point, that's more on the trading end. If you're investing for the long haul and the company is good, it is going to give you sound returns in the years to come. Just a very easy blueprint that I've made for any beginner on how to start, how you can look at, say, even these things and use the Dalal Street platform right now to pick out your stocks, pick out at least 5 stocks using these easy metrics and understand how did you make a return on this, and then understand how you can play with things. So these super basic 6 indicators for a first time investor that I've come up with, The first is the long-term stock chart. So heading back to a tab here, like you can just go on Google, search for HUL share price, press on say maximum, go on a 5-year chart or a maximum chart, and you do want to see a good return on that. And most fundamentally strong companies, in the long run, they've given people a return. You open any penny stock, for instance, right now, like a stock that is buzzing right now, and a lot in the markets right now is Suzlon, right? We go on the max chart pattern, it's still 90% down, right, over multiple years. So you see the difference in, so it might have given a return in a year, or maybe even 5 years, it's just 20% down. But you look in the long run, this is not a share that is fundamentally strong. It's extremely visible. We can pick up Yes Bank as well, for instance. It's still given a 70% return because it has seen some very good days. But you get a gist of it. We pick up ICICI Bank. There's no way it's not given a very good return max in 5 years, etc. Right? You pick up HDFC Bank. So you just get a quick gist of the fundamentals of a company by seeing its long term chart, 5 or max. Right? That's the first thing I'll tell you to look, and it should be green in that longer run. It shouldn't be red. The next thing is the promoter holding and the background of the promoter. You might have watched Shark Tank and you might have heard people say, "मैं entrepreneur में invest कर रहा हूँ." This is exactly that. So you have companies like DMart that are run by individuals like Radhakrishnan Damani. And even with the share price, the PE being so high, just the entrepreneur running the show, Radhakrishnan Damani, is why people invest in that company. So if you're very passionate about a certain individual also who's running that company, that is also a green tick you would want when you're investing. The next is a very basic thing, debt. For instance, I've given for someone who hasn't started investing, everyone knows how student loans are, how the notion of a loan is in the market. It's never really a good thing to have debt unless you're in the banking space, etc. Right? So companies that have high debt on their books, which you can find online, it's also something you would want to stay away from. Next is reserves. So no debt and someone having cash reserves is obviously a green sign. Very basic things you can look at, right? You can look for the cash the company has. Do they have any loans? Then you see, are their sales being consistent every quarter, every year? And likewise for the profits, right? And one thing I've written at the end is that no factor being in favor or against should be the basis of investments. There's going to be a lot of other indicators that go with it. It's not black and white that, oh, no debt and they have cash, so this company is green and we have to invest. There are other things you will have to look at, but these are six super basic indicators that you have to understand and get a tick on before you start investing. And after that, you can get into more technical things, but this is like that basic set you should be well versed with before you go ahead. And the best part is, you can look for stocks and search for them here. You find, look for a certain businessman you've heard of, who you've been following, say Ratan Tata or anybody. You see the companies he's the promoter in. You search for those companies on our platform, for instance, right? You can go online, check out the cash flow of that company. You can check out their balance sheet, etc., and then buy it on this platform and see how it works for you. You'll get an idea of how your investment worked and the metrics you looked at, right? So a very broad gist of things that I've explained here. I'm just going to look at some of the questions that have come up now. Just give me a minute. Yes, I think I've stopped sharing my screen and I'm looking at some of the questions that have come in. So, one of the questions that have come in is, what mistakes can we avoid during the early days of investment? I would definitely say that don't get lured by those 10x, 20x returns whenever most of the people who come into the market. So let me tell you, I was recently giving a lecture on the stock markets at a school in Mumbai, and I asked the students a question. I asked them, how many of you have heard here since they were in the 11th grade, 12th grade, that stock market satta hai, कि it's betting, कि stock market is full satta. Matlab, this is one thing that is said a lot in India, कि ये satta hai. So a lot of, I think 90% of the class put their hand up. yeah, 90% of the students put their hand up that, we do think that the stock market is betting, and that notion comes in from the people who go in and buy penny stocks as they start investing because they want 1,000% returns, 2,000% returns. You want to double your money in 1 month. If you're coming in with that mentality when you start investing, it can be extremely pricey because, okay, maybe you get lucky that one investment actually multiplies, but the hundred other investments you make in penny stocks are going to put your money to zero levels or next zero levels. So be very, very careful of that. Don't just pick up stocks for that kind of return. You have to be very patient in the markets and come in with that mentality. The other
Yes.
question
We have
I
another
have,
question for you, Anhad. When can I know
sure.
I'm ready for investing?
So, of course, one thing that you have to keep in mind, I would honestly tell anyone is that even if you have 100, 200, 500 rupees, you can start investing. I would frame that question to when can I know I'm ready for investing? Dash percent of my savings or dash percent of my income. When you reach that stage is when things get a bit more critical because you're putting in a chunk of your savings every month, every year, etc. But to start investing, I would say start as soon as you can, buy something worth 10 rupees, 20 rupees. But as you get the ball rolling, you'll be ready to invest that 10%, 20% of your income every month. So there's no fixed answer to say when you can be ready. I would say start tomorrow with even 100 rupees, 200 rupees. Or if you don't want to put in money immediately right now, use something like the paper trader platform of the Lal Street and at least kick in the process of understanding how your investment would work. I think, Charita, is there another question?
Yes, Anhad, we got another question. It is long term good start or a short term?
So I would say at the start, if you're not too knowledgeable with timing trades and knowing when to enter and exit, I would definitely say look at something longer term, hold a fundamentally strong stock. It's not very tough to know the fundamentally strong stocks. You can pick up Nifty 50 and pick up out of the top 5, 10 companies. Most of them are very fundamentally sound companies. You can find them online as well. Like everyone is aware of Reliance, HDFC Bank, HUL, etc., being titans of running our country's industry, right? So if you have the knowledge, I would say you can pick up short term, but if you don't have the knowledge, I would say hold for long term when you're starting.
Okay, Anhad, thank you. We have another question. When can I take off my profits from the capital investment?
When can I take off my yeah, so there's a way of buying stocks, there's a way of selling stocks as well. There's a way of buying stocks where you say, at this price, I'm going to put 20% of my investment at this price, the remaining 30%, and then at this price, the remaining 50%. So even while selling, you can have that mentality, that when I've made 20% return, I'll sell 50% of my holding, the next 50, then I'll sell the next 30 and 20, etc. So the way you buy at different prices, you can also sell at different prices. So that's one way you can be sure that you would be profitable from your investment, even if it falls after that, because you've sold some chunk of it, which is going to keep you in the green. So I would suggest that the way you buy in tranches, you can also sell off in tranches if you don't want to sell everything at one go.
Okay. We got another question. How much time shall I spend to learn all the basics?
Yeah, this is a great question. I strongly feel that there are very good resources available online for people to learn now, especially by Zerodha, the school called Varsity. I don't think it would take someone more than giving 2 to 3 hours a day, even that is on a higher end. If you give it for 1 to 2 weeks, you can definitely understand the basics of picking out a good fundamental stock for the long run. I'm not saying you learn how to trade or read timings and charts, but you'll definitely know that one, two, three, four stocks are good investments for the long run. And that is what you need to start with. I wouldn't push you to start trading immediately. Things are volatile right now, etc. So just giving 2, 3 hours a day for 2 weeks dedicatedly, and I think you should have the skill of investing in you for life, and you can be investing in any country after that and different assets as well, but you will just get a very good idea of how things work. So I would definitely say give those 2, 3 hours for 2 weeks. learn via Zerodha Varsity or pick up a course online. Everything is available extremely well now for the markets, and you will have a skill you can use for life. And in case you don't want to put in money at the start, read and learn from these websites like Varsity and apply the concepts you've learned on the paper trader, which has been made by Dalal Street, because it is also intuitive to use. So pick up the knowledge and start implementing it. You know, you read about XYZ, you read about candlesticks and a basic about it. Go on the platform and see the 14 days, see the 1 year candlesticks, and keep implementing what you're learning. That's one mistake I made because I didn't have access to a platform which was made so intuitively well. I was waiting to open my DMAT, pay that fee, go through the process. Then it all started for me. If I had access to something intuitive to use, I would have been implementing the things I'm learning. And maybe instead of me having that 2 year gap between my first mutual fund investment in stocks, it might have been 6 months, it might have been 1 year. So I definitely see be learning the basics and keep implementing them on a platform.
That's great. Thank you so much, Anhar. That's the last question we took, and it
Thank
was a
you
great
guys.
session. Thank you so much.
Thank you guys. Have a great day.
To